All right. Welcome to the Hurley Investments Market View Commentary for Monday, the 9th of March. A couple firsts in our market. First time the Dow has lost 2,000 points intraday. First time that we have the 30-year below the 1%. The first time the 2013 circuit breakers were triggered, which originally was supposed to be at 5%, at 10%, and shut off for the day at 13%, which are now triggered at 7%, 13%, and shut off for the day at 20%. So here we go, doing a recap of last week. We had obviously a volatile week. I want to go to the coronavirus globally topped 100,000 with more than a fifth of the cases in countries other than China. There are 90 countries affected and 3,408 people have died globally. So that was our big fear. Then today, oops, probably don't want it that big. Let's get the correct. Ooh, come on, Hurley. Let's get this down to 16. Let's make sure it's not underlined. Today, we dealt with the ramifications of our friend Putin, right? Who wants to put U.S. shale oil producers out of business. So what he really did is he went over to the OPEC and said, hey, you guys don't matter anymore. OPEC doesn't control the price of oil anymore. We have the US, we have Venezuela, we have Mexico, we have Canada, we have Russia, who are now net exporters of oil. So we'll run our own prices. Oh, by the way, I really think it's an excuse, but he said, oh, by the way, we need to keep producing oil because we're going to get back at the US shale producers of oil that can't make money supposedly under $50 a barrel, because that's the way it was before. If you ask me, it sounds like an opportunity for someone to come in and say, hey, I'm going to go ahead and try to mess with the United States. I mean, that's really what it sounds like to me. Okay, it doesn't sound like that. What it really sounds like to me is that he said, hey, I still got to produce oil to make some money in my country. So I'm going to go ahead and I'm going to keep producing oil for that reason. It probably is not going to be a benefit to Russia when it's all said and done. It'll probably actually hurt them for producing so much of their oil at such a ridiculous price, is what it really comes down to. Now, if you were to ask me, I'm kind of excited. Let me move over to a screen. Here's why I'm kind of excited. And it's interesting because we have some people here that are not as excited as I am. In fact, let me see if they're here. Yep. So I'm going to go ahead. I'm going to make a couple comments. If you guys were down, I'm going to say 1.25% today, and the market was down 7.6%, What would you tell someone new to the program? We've got a couple of you that are here new. If the market was down, you know, let's face it, the market was down, what, 7.6%? We were down 1.25%. What would you tell someone new to the program? You're killing it in the market. I like it. Obviously, we're still losing money, but I'm going to tell you why I'm excited here in a minute. What would you tell? There was another one. Better to lose a small bit than lose a large bit. I agree. Lance, I'm waiting for you to say what you told me earlier today. Say it without the swear words. Type it in. And no, I'm not going to unmute you. I think you've done a great job, Kevin. Thank you. I appreciate it. And you changed it a little bit, but I'm gonna paraphrase what you're saying, Lance. We better have one hell of a rebound to make up for what we're losing right now. And I agree with you on that. That's kind of it right there. If we putting things into perspective is huge. So here's your S&P, right? 5 days down 11.21%. The last 30 days down 17.46. Year to date, we're down 15%. That's reality. That's the harsh reality of where we're at and what we're doing. Now, let's go through what's exciting. When it's all said and done, 2 more comments came in. There will be a rebound. We even came back from the Great Depression. This too shall pass. We also have one other comment that's a little interesting, that stay the course and work the plan. It's difficult. I'm not going to tell you that I'm sitting at home having drinking beers, having margaritas. It's stressful. It sucks. Let's put it out there. It sucks. But here is some of the things that I'm rather excited about. As I go through and I'm looking at where we're at in Apple, we have some puts after we've already taken 320 puts out of contention here. Let me go ahead and let me do this a couple different ways. There puts, and where's covered calls? So the short answer is we have covered calls making up a little bit of the $3. Time to roll those down to 300. We have puts that are making up a lot on the way down. I like where we're at in Apple when I see some of the gains that are being made against the losses on Apple. Not only that, we have a position right now to buy Apple at $266 a share instead of $325. I'm looking at a $60 drop on Apple. I like where we're at. AOBC. I've got the right to sell AOBC at $10. On a day like today, how cool is it that on a $3,700 drop, we're making up $3,400? We have Boeing falling down even farther. The shares I'm ecstatic for. We don't have too many shares, but basically when we look at Boeing shares, on a $35 drop on 500 shares, wonder what that is in real terms. Well, it's that. It's $17,500. We made up 15,262. We also have short call somewhere because we look at it all together. On a $21,000 drop, we made up 18,315, and short calls at 2,100. I mean, $21,096. We made up 20,415. I'm off by 681 on 600 shares. I can live with that. The ones up here show 2322 because they don't have these short calls down here there. To have Boeing down today on 600 shares, $21,000, and be off $681, I'm ecstatic. You know how many shares of Boeing I can buy with all of this money sitting there on protection that we had on the way down on Boeing? But Kevin, you've got some leap calls that are sucking it. Yes, all the way out to January 21 and all the way out to some that are January 22. That what I paid $18 for, I can get in today at $782. It doesn't have to get back up to $350 for me to be okay in Boeing. Kind of pisses me off. We couldn't find out what happened today. What's so bad about Boeing? Well, our new CEO said there's a lot more work to do at Boeing than he thought. That's not a fundamental issue. It's a comment from their CEO. Things are a little worse off than he thought. It drove the price down $35 today. You can now get Boeing at $227 a share instead of $405. I think it was what, $425 or $428 way back when. Instead of $400, you almost have Boeing in half, more than half from their highs. What a great opportunity it's going to be to start to nibble and jump into Boeing. Let me show you a couple other ones that I found interesting, especially on a day like today. Disney, a core holding. All I'm going to say, and I'm going to say it as politely as can be, let me see who's here. Bill, Jeff, Keith, Rich. I do not believe I have any of my gals here tonight. So let me go ahead and put it this way. Disney. Leap calls, short calls, protection against stock ownership, the whole 9 yards. Disney was down $10.92. I don't know how many shares we have through everything. 63. We've got 63, 42. I mean, we've got 15,800 shares of Disney. 15,800 shares of Disney. Let's go to all. Let's find out exactly how many shares we have. Come on. Give me a second. I'm going to go through all of them here. Where's Disney at? Scrolling down to Disney. Oh, I thought it'd be better. Here's the short answer. On a $10 and 95 cent, I'm going to have to separate some of these out just so I can make the point. We have 3,600 shares here. down 39,000. We have 4,200 shares here, down 45,000. We have 6,300 shares here, down 68,000. So I'm pretty sure it's 1,500. So if I do my math, you know, $150,000, 11 shares, $168,000 down on Disney. Rough estimates. And we're up $9,750 today on Disney. A real scary one for a client that I know that's here with us tonight, Murphy Oil. Holy Toledo. Murphy Oil, small little one account position. Start out at what, 600 shares up to 900 shares, added 50%. An oil stock that's collapsed. They call this an extra, right? 368, lost $3.20. We have the right to sell it at $11.50 for puts. We made $90 more than the stock lost today. I can add 3 times the amount of shares. I can take a peek. Market value is $7,200. I can add 2,000 shares of Marathon Oil to an original 600 share position down the road here. It's not Murphy, it's Marathon Oil. Thank you, Keeve. Keeve just said it's not Murphy. That's MUR. You're an MRO. It's Marathon. Thank you, Keeve. 600 shares. We added 300. He's going to add 2,000 more. 2,300 shares added to Marathon Oil. Kevin, you hate oil. Oil sucks right now. There's no catalyst. I get it. More importantly, will Marathon Oil make it? Well, they have zero debt to equity. They do have some long-term debt of 45 cents, which means for every dollar they make, they're going to pay out 45 cents. They can get by on that. Sales are $5 billion. Book to share is $15. Cash to share. If you just went on their cash, they're worth 95 cents. 95 cents on a stock right now that is trading as a penny stock, unfortunately, right? Down at 363, 95 cents. A fourth of their value is the cash they have on hand. Unbelievable. Earnings per share next year, forward earnings per share, 52 cents with a forward PE of 6.97. Well, that kind of sucks, Kevin. That sucks bad, actually, right? 6.97 times 0.52. Hey, there's your $3.63. That validates where their price is at. They're more than fairly priced right here. Huh. Well, that doesn't make too much sense. Something's out of whack. Earnings per share next year should increase by 34.28%. Not saying it's going to. They've been sucking it. Let's face it. Their last earnings was awful. But they still have an 86.1 gross margin. Operating margin is at 12. Profit margin's at 9. They're doing what they need to do right. What an amazing opportunity for one of us who is in Murphy Oil to start out at 600 shares to now have 900 shares, where I'm looking to add 2,000 more shares, 100% paid for by the protection. We have another individual that's looking at Micron. Not a bad company, have some opportunity here. It's down at $45. $45. We have the right to sell it at 60 and a half. If you take $45 and chop it into 13,500, 13,477, sorry, divided by $45.97, 293 shares, 300 shares, a third of his position is going to go be increased by his protection. I've got a couple new clients that I've nibbled. I mean, small nibbles that have hundreds of thousands of dollars to take advantage of our opportunity. We have an amazing opportunity to buy into the market at 2016 prices or lower in some equities. How low? Some go back to 2009. Now, please don't think I'm ignorant to the fact that we have lost some money on the downside. I get it. Some of you have lost more than others. I get it. No one is close to losing 17.5%. I get it. We look at your positions every single day. And I'll be honest with you, with Friday's action, with the swoosh down, I was more excited. Hold on one second. I'm going to pause you for a quick second. Get off the phone, Scott. Okay. Sorry about that, guys. Well, I'm back. I just am excited about this opportunity. I thought I was going to be more excited when we were down a couple hundred points until the president said he may, bypass or do something to help payroll taxes. But we had our big swoosh. Our big swoosh, right? Came today as, I'm going to say, retail, right? / everyone got washed out of the market, including the baby in the bathwater. This is what you're looking for when you're closer to being at a bottom. It doesn't mean we're at the bottom. In fact, I would have felt better if we just tested the lows at 28.55. In fact, if you were to draw a line, we're still in a bearish market. Yes, we're stopping at the S1, 1 standard deviation pivot point at 27.42. We held that today just barely. But yes, we have lower highs and lower lows. So we still have some downward movement. But I'm ready to start nibbling. Now, I'm not ready to start nibbling like Mr. Saltz, if he's here. Is Saltz here today? I'm not ready to nibble in increments of $250,000 bets. But we're definitely ready to start to nibble and to reset some protection at where we're at for earnings. We have an amazing opportunity. An amazing opportunity to get into prices on stocks years lower than they have been. And we have the swoosh, we have the ridiculous drop with no explanation that all came at once. I would have been more excited today if we could have tested the 13% drop circuit breaker at the close. Only because we can start to nibble, start to cash in a little bit of our protection, start to be ready to take pieces of the sale that's happening in our market. All right. On the way on down here, let me keep going. Guess what? Dow Jones still bearish. Back to oversold. Back to oversold, not in a bad way. Man, if we could just get down to that 2250, I'd be ecstatic. More importantly, on the S&P, we're bearish. The big test here would be at the 2500 or the 2530. If we could have one more bad day and test a multi-year low at that 25, I think it's 25.25, we have an S2 two standard deviation drop of 25.30 and 18 cents. At that point, I would take all protection off and let it run. New money, I'd start to put 30 to 40% into play right there. NASDAQ bearish, broke it. Nice to see we held our S1 support level. Again, one standard deviation down. Boy, held it almost on the spot. Looks like it's 79.41 and we finished at 79.50, so 9 points away. Awesome to see some levels of support actually holding. Will the S&P end March 2020? I'm putting 0. You know, I thought I'd be up because we had a big down month. I'm putting 0. We most likely will enter or end our month down. I don't have any idea how much. It's foolish for me to even have this in right now. We're going to be down. You know, if you asked me a week ago, I said, hey, we'll probably bounce back from February's lows. Obviously, we're bouncing the other way. We're probably going to be down. And the key to how we're looking to trade comes down to what kind of coronavirus forgiveness will we see in earnings analysts' numbers and with future guidance. Kind of scary because they're analysts, right? These people are anal beyond belief. They never have to be right. They just have to sound smart. And these people make money putting out crap about businesses, right? Well, I think they're going to sell 30 million iPhones. Well, I think they're out of business and they're out of touch, even though their services department for Apple makes $10 billion a quarter. Apple has cash on hand that beats all but 6 countries in the world for GDP. Their cash on hand is bigger. Maybe it's 6 or 7. So I'll go with 7, right? Their cash on hand is bigger than the GDP of all the countries in the world except for 7. And some damn analyst said they're probably going out of business because they're out of touch and they can't sell their iPhones anymore. Whoa. What an idiot. I've got a lot here for you. I'm going to turn it over a few for questions. The market triggered a circuit breaker that kept stocks from falling through the floor. Here's what you need to know. Do go through and read this. I would like to think we're close to a bottom, but why not better understand what happens if we're wrong? Wall Street fess up. We don't know what's going on. Holy Toledo. What an amazing article that they can now get to people. They're supposedly these experts and say, hey, we don't know what's going on. I could have told you that months ago. Again, the biggest point to put right here, just to help you out, fundamentals trump technicals over time, but short-term sentiment trumps all. Over time, fundamentals will outweigh your technicals. You'll be in great shape being a fundamental trader over time. But short-term technicals will beat you in everything. I've got 2 comments that let me save those for the end here, just to let you guys know. All right, here we go. Stressed stock market may need to retest its lows before finding its footing in the Corona crisis. Blew through those. Check mark that one off your box, right? The next lows are 25.25, a yearly low. In fact, let's see if I can find that. Let's go ahead and let's make sure. Let me show you what I'm looking at. Ten-year. So I think we're looking at 25.34. That should be the one that tests right there. Let's see if I can. Not gonna get it. Sorry, guys. No, let's figure it out. Hold on. Give me a second. Give me a second. Give me a second to find it. Quick second here, and I'm gonna find what I was looking for. Oh, see if I can't squeeze this down. Oh, this is. Why can I not find what I want? All I want to do is give me a 10-year chart. I All right, I'm going to face it. I can't. Well, I could do monthly, huh? 10-year chart. $25.08, but the big one was at right there, $25.28. And then we're going to go down and we're going to be messing with the 2018s. Sorry, I'm not finding what I'm looking for, so here I'm messing with all this and not helping you guys get it. Fed slashing rates to zero is more likely than a recession, Barclays top analyst says. That could be very interesting. That would really hurt our banking in general, yet really give us an amazing opportunity to refinance our homes. The pros, we don't know what's going on. Stress stock market retest lows, already did that one. Putin dumps MBS to start a war on America. America's shale industry, a good read here to find out. As bad as it is, most investors see recession a long shot. I still agree. Plummeting oil prices and mortgage rates could boost consumers rattled by the corona fears. I'm looking to refinance my house. I'm on it. Interesting 3-year-old retiring America. Stop wasting your money on 7 things if you want to retire early. You want to know why Americans struggle for retirement? Eating out. I do that one. Phone upgrades. I do that one. Clothing and apparel. I do that one. Lottery tickets. I don't do lottery tickets. Extended warranties. I don't do extended warranties. I do cable TV. I do impulse purchases. I do 5 out of the 7. Looks like I'm not retiring early. Coronavirus is a once-in-a-year catastrophic event that will lead to interesting opportunities for investors. I agree 100%. Make sure you read this one. Baidu stock, not for the faint-hearted. I kind of agree and I kind of disagree, but I'm giving out both sides of the story on Baidu. I've made millions on Baidu over time. And last but not least, we have this plunge for stocks makes no sense. Here's how we know. A really interesting original Bloomberg article, excuse me, not a comment, but it's an article. So going through, let's talk questions right now. What questions do you guys have? 2 or 3 comments were made. An article is brought out. Maybe I'll put that in here. Why one of the most dangerous charts in finance should be ringing alarm bells. The 2020, look at the graph, demand side factors, non-economic, affecting the market, predict the sentiment on that basis. So I will have ADP, Abraham, I'll put that other article in here for them to look at. Bill, you can't predict sentiment on that basis. I agree. Fundamentals and technicals are out the door. We're really just looking at testing lows, but you're looking at some herd mentality. We've hit below that 16.66% Fibonacci Elliott wave. Herd mentality that some things have gone down. Some things have already hit that 38% drop. That 30, it's like 36 to 38.6%, which is a screaming, almost no one has the willpower not to buy in at that price. Pretty interesting. Keith said, go to studies if you want a horizontal line, scratch that. He's trying to help me figure out what I wanted to see on the chart, but I used it to the monthlies. Thank you, Keith. So what questions do you guys have for me that I can try to answer for you today? Knowing that what I might say today might have little relevance coming to next week. Why am I so excited about bear market territory for the Dow? So in all honesty, I could care less about the Dow. Yes, the Dow dipped into bear market territory today. It might go there tomorrow. The Dow is what, 31, 36 stocks. It's not even a real index. It's a traditional index. So to set the record straight, I could care less about the Dow. But a bear market opportunity, if you can make half of that downward opportunity, instead of having a 25% return to get back to break even, you only need a 10% return to get back to break even, if not less, an 8.9%, because you added 10% more shares of stocks, and if you had 20% more shares of stocks, you only needed like a 7.6% return on that 20% to get back up. I'm excited because we've done a pretty good job of making a downward movement. Now, I know there's two of you here that you're going to say, damn it, Kevin, I'm down 9% or I'm down, 10%. And I'm going to scratch my head a little bit and go, you're down 10% on stocks that have lost almost 50% of their value. I've got nothing to say to that. If you've got stocks that are down almost 50% of their value and you're down 10%, please be ecstatic. And also, please stop looking at the stock market. You're going to drive yourself crazy. I like that. That I can add positions to stuff that's down 50%, paid for by some protection. Wow. Huge opportunities. Huge opportunities. So that's why I'm excited. I'm excited because we've made up more than half the downside movement as a whole in general, right? Down 8% or 8.25% as a whole. And we have pricing for some positions that go back a decade or more. You ever have those thoughts? Man, if I could have bought Apple at blank, man, if I could have bought Disney at $86, we're at 106. We might be back to $86 way back when. Man, if I could get Apple, if I could have got Apple at 250, Boeing at 225, Visa 165, Ford at $6 freaking dollars. Wow. I think Bill Brandner might give me a call and say, back up the truck. I want Ford for the first time ever. Oh, boy. Next time I take Bill and his wife out to dinner, I think he's going to kick me hard in the butt on that one. Oh, dang. Oh, could Ford not have guessed better on, hey, we're going to get rid of some of our fuel economic cars. We're going to go for the gas guzzlers. We're going to go for the trucks, the money makers. We're going to go where people can afford gas when it goes back down to $1.65, 95 cents a gallon. Amazing. Ooh, amazing question. Abraham, thank you very much. I have a portfolio question for you. What is your 2020 you expect as probable reward on the proportion of risk? So what he's really getting down to, what percent return can we make in 2020? Well, it's pretty neat because the S&P is down 15% already. We'll probably go down to 20%. So if we get back to a break-even year, which might not come to the election that Trump wins, so the markets can finally settle down, say we have a stock market friendly president, we've gone through coronavirus, we've gone through the summer where it cools down, it doesn't come back as bad in the winter, we've gone through the election cycle. If we're down 20% on the S&P, and we've got positions that are down 50%, and we just get to a break even on the S&P by December, because we're adding 10, 20, 30, 40, 50,000% returns on some of the positions, you could very easily be looking at a 20, 25% return, if not higher, on a flat market year. Well, Kevin, you're not showing it right now. No kidding. It's the process. We're going to add tons of shares. We'll probably get back to a break even this year, looking at what this year has to suffer through. We seem to still have profits okay, except for oil and energy. We seem to have consumer confidence still doing okay, full employment, personal spending, personal income still going up. We're going to add positions back on. We really could look at nothing more than the percentage of shares we add back in, the amount of cash that we get to put to work at a much lower level. We could very easily look at a 20, 25% return, if not higher. The short answer is, Abraham, I don't know. But I do know if you add 20, 30, 40, 50% more shares of stock and it gets back up to where you bought it, you're 20, 30, 40, 50% more profitable on the back end. It's just a chore. It's a struggle to get there. You can't have your store go on sale, everything in the store go on sale, and run out the front door. That's not going to get you there. It looks like I may have missed a couple comments from people. So let me go through just to make sure I haven't missed anything. Excellent question. So Lance made the question here, Kevin, you know we're not in 2008. So back in the day, that was my claim to fame. A couple of you here today that would vouch for me that say, yeah, 2008, this son of a gun made money. I get it. Lance, I understand we're not in 2008. I understand Bank of America has fallen down to $22 today. Down from 35, it's lost, what, 13 on 35? What is that? Let me do some quick math for you. 13 on 35 divided by 35. It's lost 37.1%. I get it. And we had 32 puts and 29.50 puts and short calls. Man, I think we're going to make up everything on the way down for Bank of America. On Disney, we're probably going to make everything on the way down for Disney. We're not going to do it on Apple. We're not going to do it on Baidu, but we're going to be very close on Baidu. We're not going to do it on Visa. We're not going to do it on Boeing. But we're making up 75% or more. I know it's not 2013. That was more straight down where you could just add puts all the way down. It's harder. I get it. But the same premise and the same process works. It'll work it worked in 2008. It's going to work when you have these pullbacks because it's a simple mathematical equation. Anything you make up on the way down is profit when things go back up. Will Boeing get back up to 350 this year? Probably not. But will it get back up to 300? Probably so. Well, Kevin, you've got leap long positions at 350. I might be moving that out in time at a lower strike price. But just because they're at 350 that we originally bought for $42, it's now sitting at 18. It doesn't have to get to 350 to be profitable. We've already dollar cost averaged. I understand. And Mike, if I can go ahead and I can make the comment that you're making, this is going to go with Mr. Gupta. Two people on Sunday said, boy, some things really look attractive. One person, Dr. Gupta, came back and said, you know what? Looking at the futures, it no longer looks attractive. I wouldn't mind owning Disney at 106 if it goes down to 100. I don't want to own Disney at 106 if it goes to 86. Congrats for Dr. Gupta to give me a text back and say, you know what, Kevin? I realized that, hey, what looked good last night didn't look good a couple hours later. And to hold off, to find a bottom, to find a point, a justification, some things that'll line up that say, you know what, nibble at this point. Congratulations to a trader who's going to be a much better trader down the road, because he was wrong on his first comment and he came back to say, you know what, I need to rethink this over. Mike, on the other hand, I never got a text from you. I'm pretty sure you're glad we didn't put short puts on Boeing at 250. It's not such a great idea. Well, let me take this. I'm going to say this two ways. Not such a great idea to own Boeing at 250 when it's trading at 220, right? 222. But a year from now, 250 could be a steal on Boeing. If you're willing to sit through the pain of knowing you're going to be assigned at 250, yeah, you could have got, $12 of credit. That's still 238. 238 prospectively kind of sucks when Boeing's trading at 227.17. Much better when Boeing's trading up at 260, right? And you're like, hey, at 260, if it gets down to 250, I like it. I'm okay, right? Not so good when it goes from 260 down to 227. So keep in mind, markets are fluid. A correct answer for one day could be wrong the next. It's okay to be wrong when you have a process to make it up. It's okay to admit you're wrong and say, whoa, 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 hold off, and have your pride put you in a position that screws you and loses you tens of thousands of dollars. It's okay to nibble a little bit until you get a confirmation. No $250,000 bets. That's not a nibble. That's a gamble. Well, what if I miss some of the upside? So you miss some of the upside. I'd rather miss a little upside than get my ass handed to me on the downside. It's okay if you miss a little of the upside versus letting it all ride. This is not gambling. This is a process. It's a mathematical process to give you some financial freedoms down the road. Are there any other questions that I may have missed as they've come through, or any other questions that you'd like to ask me right now? So I'm going to say this tongue in cheek. What about the people that are doing better than you collar trading? So let me just make this comment because it's probably an education. Have them show you the real account. Well, someone's going to say, well, Kevin, it's a paper trading account. If you're okay following a paper trading account that may be profitable, that has no fear and greed and no real money at risk, and that's the person you want managing your account, and that's what you want to follow on your own, man, effing go for it. But here's my comment. I'll give them my GoToWebinar login and password. Have them bring up their account. Have them show you the account. The Pirate Man, Options Pirate, Covered calls has gotten his ass handed to him. Doctor Options, it tells you on how to naked puts and what have you, has got their butt handed to them. Bill, we found one I liked, Gorilla Trades or something. Any comment on how they're doing? Someone that actually is showing a real account. I've got some of the utmost respect for someone that will do that. Any comment there, Bill, that you can help me on understanding that? What is it? The high risk, high returns. Getting their butts handed to them. Yeah, Bill, they show their losses on trades. Are they killing it right now? Are they taking their pain? Options expert, Dr. Options expert, getting their butts handed to them. There you go. Someone that hasn't any option suggestions recently. Probably none that I'm going to have this week either. My last option ones are the Q calls and the SPY puts. Boy, you want to see something kind of frustrating to me. Both Keeve and I put in a couple option trades here recently on our Tuesdays and Thursdays. I think about everyone has them in their account. Keeve actually rolled some up. Pretty neat to see some of those rolled up and the opportunity. Give me a quick second here. Let me go back to no Parker. Nope, let me just go, yeah, let me go to no Parker. No Parker. You guys should be able to see everything. Talk about volatility. We've got these thousands, 23,500. $485. And right now the SPY's trading at $274. So I am $4 in the money on this. $10 spread. This should be closer to $10, right? And I'm only up $4.85. Why the heck this isn't closer to $10? I don't know. That's just a volatility increase. Volatility crush might really help out my position. Time might really help out my position. But what a bugger. You look at this one, $9, right? 313 to 304, $9 potential profit of 770. 293, we got $5 of potential profit there of 302. We've got $10 of profit, $10 of freaking profit potential up 485. Man, that sucks when options aren't helping you out in that regard. All right, guys. Hey, let me just finish off with this. Anything we make up on the way down is profit as things come back up. Bill, you made the comment, Gorilla Trades uses stop losses. They got their butts handed to them today on anything that had big drops. Stop losses are not protection. It does not guarantee you that you're going to get sold out at your stop loss price. That's why Bill's using puts. Bingo. Bingo, bingo, bingo. Guys, I know the pain sucks. When the store goes on sale, don't run out of the store. Nibble, take some profits so that when prices come back up, you can go sell that crap on Amazon for tons more, right? Buy it low, sell it high. It doesn't just go back and forth. It's a process. Guys, have a great evening. I'm looking to go eat breakfast. I guess it's lunch. I already ate breakfast at like 1:30 talking to Keeve. Guys, have a good evening. I look forward to talking to you tomorrow. I hope this was helpful for you. I hope you can see some of the opportunities and profits available that we get to cash in and use. We have an amazing opportunity to get into pricing we haven't seen on some positions in a decade. What a cool opportunity we have. Guys, take care. I'm looking to leave work and go spend time with my family tonight, knowing I'll be back at it at 5:30 in the morning tomorrow. Have a wonderful evening, and I look forward to talking to you tomorrow evening. Good night.